Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for Three Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Well, hello there, ladies and gentlemen. It's a Friday once again. It's been the end of a rather hectic week, but it's the lead up to Christmas. Will Christmas be cancelled? Will number 10 decide that they can have a party but we can't? Anyway, let's not think about that. Let's not dwell upon that for too much longer. As ever, it's your man in the north, Mr. Graham Nicholson from Cornhill International Payments, who's going to give us a run through of what's been hot and what's been not in finance this week. Graham, how's it going, mate?
It's good, mate. I've just seen Romeo there, just
Jumping around
your company. I'm just comparing the Christmas trees here as well. We are in a very festive mode. I can just see his tail going there. I love it. Hey, risk on mode, I must admit.
Massively.
Catalyzed early in the week when the China cut the reserve ratio. The market loves China being accommodative. It really does help the sentiment in investors with the confidence, and Shanghai index above 3.6, more or less yearly highs. And I'm looking today, we're looking at the UK 100, we're just above 7,300 again.
Strong.
We're all back.
It is. You know, we had a couple of weeks of, November wasn't good with the Omicron variant, and whether this is going to send everyone back into lockdown and what's that going to affect on the markets. And then now that we've found out that actually it seems to be less virulent than previously thought, everything's kind of removed back to how it was. So we had that brief dip, but that's the markets. They go down. Down like an elevator, up like an escalator, and we're on the upslide.
But the main thing is the best returns this year has been in the stock market. Simple as.
Without a doubt.
You've got your froth, you've had your little ups and downs. This, as you say, this currency-wise, it's a tale of two halves of the year. The first half of the year, sterling, we were up at 143 against the dollar on the 1st of June. Today, we're struggling around 1.32.
Wow.
7-8% drops. And the dollar index is above 96. Euro dollar, we were up at 1.23. We were talking about it. Today, we're struggling around the 113 mark.
Wow.
So it's been about an 8% gain on the dollar in the second half of the year. The Fed are obviously in the hawkish mode. ECB, no change, negative yield curves. And the Bank of England somewhere in the middle.
Well, they seem to be pretty much on the front foot with regards to tightening and then rate increasing. But I think this Omicron variant, they've just like gone, whoa, okay, let's see how this plays out.
What's the final nail? And this morning, I've seen GDP came in at 0.1 this morning, which was a bit lower, and also industrial and manufacturing data was sluggish.
Absolutely.
I mean, the market's still a bit wary that they might do 15 basis points next week. Would it really help? I was actually thinking more, is it really worth it for them? The banks have got to change. All the mortgage letters have got to go out, and all about the change. Is it really worth the cost?
I don't think, to be honest, I think it's a bit piecemeal at this point in time. I think they should have done stuff, a few months ago. Probably August, September time, they should have done something there, but they didn't. They missed the boat, and that goes to the Fed as well. So, I think the Fed, the expectation of the Fed is kind of being brought forward, because I think they were talking like September next year to start raising rate. I think that's probably likely to be a bit sooner. But would it make that much of a difference in the Bank of England just sat on the hands? I think they'll probably sit on the hands, to be perfectly honest.
Well, they've got to turn around to 7.2 from last month, and if you're talking about restrictions that are going in, Christmas parties being cancelled apart from down the street, it's really not favouring that now. And but CPI this afternoon, you know, we're going to see that this is the fireworks. This is the Hollywood number.
Where do you reckon? Where do you reckon we're going to be at? Any thoughts?
What, the CPI?
Yeah.
I've got an idea it's just going to peak out. I mean, the market's looking at 6.8.
Yes.
Percent. I've got a little feeling it's going to be a little bit lower, and the market's going to get a little bit of a cheer on, thinking, "Oh, I think have we peaked? Have we peaked?"
I think I don't think we've peaked yet. I think we'll probably peak back into Q1 next year. That's my call. And I don't know. I can see a headline in the paper, a big 7% headline. There.
Wow. So if it is, you're going to see the dollar get more legs in the dollar.
Absolutely.
But talking to the market, you know, the ECB and the Bank of China, they love a weak currency, and so does Romeo.
He loves it. Honestly, as soon as you talked about the yuan, he was off. He loves a bit of renminbi, this lad.
Yeah. So I think those central banks have been quite open about it. Bank of China always says we're an export-led economy, and Romeo, you gotta love that.
Dropped his toy. There you go.
He got his toy. So basically, it's been a second half for the dollar, a year for stocks. And we're going to see what this inflation number does this afternoon, and you know, people that is the roundup, and there's more from Romeo.
This is it, honestly, man. I tell you what, he's got his bloody rubber duck. Look at that! It's a rubber duck that they chopped in half. That used to be a duck, right? And he loves it. And did
it used to make a noise?
It used to.
I've got one our little cavapoo.
Yeah, it used to, but obviously he took that apart. But anyway, so on the channel this week on the channel I've got James Sim, River and Mercantile European. Wow. That's on there at this moment in time. This week coming up, so Tuesday next week, I've got Charlie Bond, Invesco Global Emerging Markets, with a roundup of how emerging markets have performed this year, and then the considerations and the outlook for next year, how he's positioning the portfolios. It's been a great performance in terms of outperformance of peers and benchmarks from Charlie this year and the lads at Invesco. So if you're interested in that, have a look at that. And then this is it. We're on the final pathway into Christmas. So it's Christmas jumper day today, hence this. I don't normally rock about with a Christmas jumper on. I think it's Christmas jumper day. The wife told us, Norma told us, it's Christmas jumper day today, you'll have to wear one. So I hope she's not wrong. So I look a bit odd.
Put it on again next time. But next Friday, I am going to Liverpool Newcastle match on the Thursday with my COVID pass.
Right,
passport.
Yes.
So I won't be around on the Friday, but we can squeeze one in on the Monday.
Absolutely, no problem at all. Well, that's it for the week, mate. We'll keep an eye out inflation. You take it steady, and I'll catch you up next week, bud.
Good man. All the best.